Hello, everybody, and welcome to this particular session. This is a psychology series, and the TFTL private members series. And my name is Timothy Kerry, as always. And today I want us to look at why traders self-sabotage. Okay, even when you have a strategy. So remember that you don't need another strategy. That is something that I've always said. Okay, so you don't need another strategy, you don't need another indicator, and you definitely don't need another YouTube video showing you entries, because the truth is always most traders already know enough to be profitable, but they are still losing. And that should be the big question in the room. Why? Okay, why? And to answer that, it's because I've come to realize that traders are sabotaging themselves every single day. Okay, every single day. And in today's session, we are going to break that down. And here is the hard truth: your biggest problem is not the market, it's your behavior and lack of discipline. Okay, it's your behavior and lack of discipline. You can have the best setup in the world, but if you enter early, you move your stop loss, or you adjust your stop loss, you keep adjusting your stop loss, you over risk, you revenge trade, you will still lose. Not because your strategy failed, but because you didn't follow it to the letter, right? And this is what we call self-sabotage. I don't know how many times that you have sat down, written a trading plan, but you don't follow that particular trading plan. I don't know how many times, because I want you to ask this question from the bottom of your heart. How many times you have drawn your order blocks, or you have your entries, you know that when the price comes to this level, that's when I'm going to take an entry. But how many times have you seen yourself taking entries even before that particular time? Right? So many times, so many times. I believe so. How many times have you adjusted your stop loss? As the market comes to hit your stop loss, you keep adjusting it lower and you ended up losing money? I believe so many times. Right? How many times have you over risked, or taken a high risk, right? Or over leveraged? How many times have you revenge traded? These are the questions that I want you to answer yourself truthfully, because the moment you answer these questions truthfully, then you'll be helping yourself a big chunk. Okay, so what is self-sabotage, or what self-sabotage looks like? Self-sabotage is in trading is actually subtle. I can say it's actually subtle, and it doesn't look like a big mistake. So it looks like small decisions that slowly destroy your account. For instance, you see your setup forming, but you enter early because you are afraid of missing out. That's self-sabotage. Okay, entering early. Um, you take one loss, then immediately jump into another trade to recover. That's revenge trading, right? And that's self-sabotage. You are in a good trade, but you close it early because you are scared. That's fear, and that's self-sabotage. Or worse enough, you increase your lot size because you feel confident. That's not confident, that's undisciplined risk. And that's how accounts get blown. Okay, so that is all we call self-sabotage: entering early, moving stop losses, over trading, over leveraging, that is over risking, revenge trading, all those examples. That is self sabotage. Okay, so now that we know self sabotage, formal entries, revenge trading, closing early, over risking, now that we understand that, because I'm not going to go into details of all those psychological mistakes, we have covered them in the public channel, and yes, we'll still cover them, but maybe probably they'll come in a later session. So why does self-sabotage happen? Why it happens, or why traders do this? Okay, so the big question that I want you to ask yourself: why do I overtrade? Why do you maybe probably overtrade? Why do you maybe probably revenge trade? Why do you maybe probably of a risk, right? Why do you probably move your risk? That is the question that I want you to ask yourself. Why do traders sabotage themselves even when they know better? It comes down to three things. Number one, lack of structure. That is meaning that you are not trading from any kind of a structure. You are basically trading random. That's gambling. Emotional decision making. This is where emotions comes into you, right? Emotions comes into you, and then now you start trading out of emotions. Addiction to outcomes. It's also a reason. And let me break them down. First, lack of structure. You don't have a defined process. That means your brain fills the gap with emotions. Number two, emotional decisions or emotional decision making. When you are in a live trade, your brain goes into survival mode. So you are not thinking logically, but you are reacting. That's where emotional decision comes into place. The third one, addiction to outcomes. You realize that most traders are obsessed with timing. But trading is not about, most traders are obsessed with winning, but trading is not about winning. It's about executing a system over time. When you focus on outcome instead of process, you'll definitely gonna lose control, right? When you focus on outcome instead of process, you'll definitely gonna lose control. So, when we talk about lack of structure, so without a plan, emotion will take control. So, and the reason why I've always insisted that we should be having a business plan or a trading plan, that is. So, if you have not, maybe probably you are in this particular private mentorship, you have not maybe probably come up with a trading plan, please reach out to me and I'll be able to help you in terms of how to come with a trading plan. Besides, I also have some videos in my YouTube channel that will help you in terms of coming up with a trading plan. I shared a tool that I shared a trading journal. I shared a trading plan which entails a trading journal, and whereby you can be able to journal your trades and also have some rules. So I divided it into different portions so you can utilize that. And I shared a video basically showing you how to use that trading plan. So remember, structure is what creates consistency. So you have to have a structure, you have to have a plan, because if you don't have a plan, then your plan will be to fail. When you talk about emotional trading, that is fear and greed, which override logic. So if you're trading from fear, that is fear of missing out or fear of losing, or maybe probably you're trading from greed. You want to be rich quick. Therefore, emotions will override you, and if emotions override you, then it sabotages your logic, which definitely sabotages your outcome or your trading outcomes. So you react instead of executing. All right, so you find yourself that you react instead of executing. So that's how emotional trading can really cause mayhems in your trading journey. Addition to outcome, this is focusing on winning instead of process, which leads to poor decision making. There are those people who feel that they have to win all the time, and if you have this mentality, then you're focusing more on winning. You have outcome addiction. So remember, this is a game of probability. There will be trades which you'll win. There are trades which you're gonna lose. But now, what balances everything for you to emerge profitable at the end of the month, at the end of the year, is risk management, your risk to reward ratio. Okay, so this is the mindset that I want to give you at the moment. This is the mindset that I want to give you. So the first thing that you need to understand from this particular thing is, number one, stop asking, will this trade win? Okay, and then now start asking, does this trade meet my criteria? So if you ask yourself this, if you have this kind of a mindset shift, then it would prevent you from sabotaging yourself. All right. So from today, let's stop asking, will this trade win? And now start asking, does this meet my criteria? Does this trade meet my criteria? What is your criteria? Your defined entry rules, how your defined strategy in the trading plan. How have you defined your strategy? How do you take entries? All right, so you want to see that all your criteria according to the strategy are met. If none of them is met, then if one of them is not met, then that means that is not a high probability trade, and you let it go. Okay, so the solution is actually using a structured system. All right, the solution here is using a structured system. And what is this structured system that I'm talking about? Okay, so the structured system is, first of all, you have to get the bias. Okay, so this is before even I talk about that bias checklist, risk and review. So understand that this is exactly this reason. The solution here is exactly why I created the institutional age toolkit, and I'll be sharing these toolkits in the subsequent video. I'll just create a video whereby I'm going to share those toolkits and show you how to use those particular toolkits, because these toolkits are going to give you the discipline. And you understand that discipline is not something you feel, it is something you structure. So the toolkit that I'll be sharing in subsequent videos forces you to define your bias, follow a checklist, control your risk, review your behavior. All right, so those things, bias, you have to check the bias. It will help you, toolkit will help you to understand the bias of the market. And then it will have some checklist that you can be able to use, and also risk checklist as well. And also it will show you how to be able to review. So it's the bias, checklist, then list, and then now review before you take so before you take the trade. It's up to number 3: bias, checklist, and then risk. Okay, so then after the trade you have to do the review. Okay, after the trade you have to do the review. So the toolkit role is basically the institutional hedge toolkit that enforces discipline and removes emotions in your trading. Right, so the key takeaway here is that profit comes from consistency and not random wins. Okay, so profit comes from consistency and not random wins. So here is your challenge: before your next trade, ask yourself one question: am I following my system, or am I following my emotions? Because that answer will define or will determine your results. If you are serious about improving your discipline, start using the toolkit. Right, and I'll be sharing the toolkit in the next video that I'll be doing, so that now you can be able to work together. Right, so then now stop guessing, stop reacting, and start executing. And I will see you in the next one. Right, I'll see you in the next one. So these are the action steps. Before your next trade, ask, am I following my emotions or systems? All right, so and these will really help you. So until the next one, keep safe.